Okay, let's begin. Hopefully everyone can see my screen okay. Hi everyone, I'm Jay. For those of you who have not been to one of these before, these are the quarterly conference update calls that I do every quarter. So this one, as you can see, was posted on the eToro feed. Normally they've done it invite only in the past, but this one is open for all of you. So hopefully there's a lot of new people here and fresh faces. Before we kind of dig into the presentation, just the usual disclaimers really. None of this constitutes as financial advice. I don't understand your personal circumstances. Views that are expressed are my own. They're not eToro's. They're not, anything else beyond that. So yeah, please, obviously, seek out your own kind of investment advice if you need to, because that's not what this is. But what this is if it will change screen. What this is my update on how Q4 2022 went, and I guess the year overall as well. I feel like I say it every year recently, but another wild year. I'll start things out by going through an introduction of me and my strategy, as I always do. Then we'll dig into the performance over the quarter and over the year. And then look at the markets, what was going on in the markets overall and drove markets in Q4. And of course, some of the kind of standout trades or events that really kind of were interesting in terms of our portfolio for the quarter. And then at the end, we will, of course, look through the kind of things that I'm looking at as we move into 2023. Where my money is parked, I guess, and your money as well, if you're copying me, of course. And then at the end, we'll have a short period of time for a Q&A as well. So you'll be able to ask your questions in the Q&A. So you can feel free to put them in there while I'm recording if you like. Obviously, might be better to wait a bit until I'm through the presentation, so that you're not asking something that I might answer anyway. Okay, let's get on with it. So this is me. As you can see, I've still not updated the picture of my desk. I say I'll do it every time, and I never remember to until it's too late. So my desktop doesn't look like that anymore, but I've still got 4 monitor setup. I have top 2 screens for charts all the time. The photo there is from the last eToro Popular Investor Summit in London, which was an awesome event. Hundreds of popular investors and a bunch of staff from eToro were over there and talking through markets and everything in between, really. So it was a cool event. And of course, as you can see, I got to spend some time with Yoni, which is always nice. In terms of my journey on eToro, so I've been on eToro since I think 2013. So this is the start of my 10th year now. On eToro. Before that, I had used a few other platforms as well for investing, but I didn't become a popular investor until 2017. I'm entirely self-taught up until a couple of years ago when I qualified with CISI. And since joining eToro, my CAGR is around 30% or so, which is really good for almost 10 years, and I'm hoping to keep it that way. I pride myself quite a lot on my kind of ethics and my kind of worldview. I like to think of myself as a bit of a futurist, a bit of an environmentalist. Just someone that tries to be somewhat conscious with where our money is invested, and how that may impact people's jobs and the environment and everything else around that. And my background is actually in gaming and events. So before becoming a popular investor, I worked in esports. I was a professional gamer for a while, and then I worked in esports events as well, and some time in logistics as well. So event logistics and things like that. So a bit of a strange background to land me into becoming a PI, but that's me. In terms of the track record, on eToro, my lifetime returns are over 1,200%. I still have over 20,000 copiers. My assets under copy, so the total amount of money that is copying me on eToro is over $75 million. Which presents challenges on its own in some ways, because it's a lot of responsibility and a lot of capital to actually be moving around in the markets as well. So it's something pretty cool to be managing that kind of that money. Well, not managing, I guess, but having that amount of money copying me for so long. My CAGR, as you can see, this is the actual specific number. I said it was around 30%. It's currently at 33.48. All of these numbers are as of the end of Q4. So in terms of my approach when I'm looking for investments, generally the first thing I do is I try to identify a future trend. This could be anything from electric vehicles or cryptocurrency things, decentralized products and projects that are kind of taking over. Could be ChatGPT and AI related things. Could be various new technologies. But generally speaking, it's kind of in the tech kind of space for the most part. But that's not necessarily always the case. Sometimes it can just be something disruptive that's happening, or a world event like we saw a lot of in 2022 with the situation in Ukraine. After that, I look at the product. I spend quite a lot of time on this. I don't think this is something many investors really do, not to the level that I do, at least. I'm quite obsessive. I spend a lot of time looking through how all of their products work, the pricing of them, what the competitors are, what are the advantages, what are advantages and disadvantages. Because for me, if you have a good product, then it makes things a lot easier to make money out of it. Which leads me on to the next part, which is the fundamentals. So looking through the balance sheets, the earnings calls, I actually listen to most earnings calls, which is quite time consuming when you've got as many positions as I do. But that's something that I enjoy doing. And I think, again, it gives me more insight into how management are really thinking as well. The next part is ESG. I think in some circles, this has almost become like a dirty word now, because the waters have been so muddied by, companies like Exxon and things actually having quite high ESG scores. So although it says ESG, I guess really it's more about kind of ethical investing as well, which is different to ESG, but there's a lot of overlap. And I still look at ESG as well. So ESG stands for environmental, social, and governance. So making sure that they have that the companies that we're investing in are being responsible with the environment, responsible with their staff, and with the communities around where their facilities are, and things like that. And then governance is also really important to make sure that there's no corruption, there's no nothing strange going on, that the company is well balanced and kind of self-regulating in a good and healthy way. After that is portfolio fit. So this is really making sure that the positions that I've identified and the areas that I want to invest in actually fit well with the portfolio and complement other things in the portfolio, and I don't end up in a situation where I'm overly exposed to the point where it would really be risky for the portfolio. I do spend a bit of time on the last two as well. So sentiment, really looking at, what other people think, what consumers think, things like that, the kind of news that's out in the world and how that's really kind of been perceived by people. And then technical analysis as well. So looking through the charts and the volume and things like that, which can help identify kind of shorter term things, I think. So in Q4, the portfolio themes, this is actually something that I spend an unnecessary amount of time trying to juggle to make it fit into 6 boxes, because it's not necessarily that easy, and there's a lot of overlap in the areas that I invest, in terms of they all kind of touch each other quite a bit for the most part. So I'll start off with technology. I've got a picture of Sony there, but there are lots of different companies in my portfolio that would come under technology, I think. Probably the most known and the largest of them being Microsoft, which is a position that I've held for a very long time. I'm really confident in Microsoft, and I think the recent news that we saw with ChatGPT just adds to that, actually. But yeah, there's I think that the kind of growth of these sort of companies is still ongoing, although perhaps maybe it's going to slow down a little bit. Who knows? Now that we have AI on the horizon, that might change again. Electrification is probably the trend that I'm overall the most optimistic about. And this is an area that I've been investing in for probably about 4 years now, I would say. And really it started because of my investments in renewables, and then learning more about the kind of infrastructure behind that and how that connects to the grids that we all use for power and lighting and everything else. So yeah, that's one of the really big themes in my portfolio. Utilities as well. So utilities, again, it's kind of a bit of a broad mix, because a lot of those kind of cross over into electrification. But I do also have some companies that deal with things like water management and waste management. But generally they're more on the kind of power side of things, for the most part. I think that, again, this is an industry that I think traditionally people look at and they think this is a stale industry that just pays a dividend and, there's no growth. But I think with the amount of money that's being poured into renewables and into new connections between different countries to try and, distribute power better and build slightly more decentralized infrastructure, there's really a lot of money kind of flowing into this space at the moment. So I'm actually expecting growth here to be pretty reasonable if you're investing in the right kind of companies. MISC and hedging, this is the category that I put everything else into, that doesn't fit in the rest really. I've got a picture of Lowe's there as an example. So there's, I do have quite a few consumer goods companies, consumer staples, a few consumer discretionary as well. And yeah, that's really where they sit. Those positions are largely to try and help balance out the portfolio a bit more, and also reduce volatility a bit as well. Industrials and basic materials seems like a strange kind of group to put together, but again, I struggled to fit them all into the boxes, so that's how I ended up. Actually, in the picture is one of the positions that I added, started building quite a lot in Q3 that's done really well for me, which is BCC, Boise Cascade, which is a lumber company over in the US. And again, it's not as related to all of the energy kind of things, but there's a lot of kind of innovation going on in green building. And this company in particular, for example, produces interesting types of timbers that can actually be replacements for steel beams in some buildings, which is, yeah, I think going to become quite a big trend in the future because of the kind of sustainability side of it. And then last up, we have renewables. So again, this is somewhere that I've been investing for a really, really long time. I don't think I really need to cover it too much, but we have exposure to wind, a small amount of exposure to nuclear, and a lot of exposure to solar as well. And, a few things in between, some battery stuff. Yeah, all of that kind of thing is kind of lumped in there as well. On to performance. So I think Q4 was a bit of a strange quarter, really. And I think that's actually kind of displayed quite well by the difference between the S&P 500 and the NASDAQ and the Russell 2000. So we saw small caps do well. We saw legacy companies do well. And we saw the NASDAQ take a little bit more of a beating in the quarter. For me, it still turned out okay. I eked out a profit of almost 5%, which isn't too bad. You can also see that on the European side of things, that's really where a lot of the growth was. The European stocks had been kind of ignored for a long time. And as we'll talk about later, I think a lot of the reason for this kind of burst of growth in the valuations there really came down to the ECB and also what was going on in Ukraine at the time as well. For the full year, again, it's a bit more of a kind of the picture that you would expect, I think. So the S&P outperformed the NASDAQ, the Russell also slightly outperformed the NASDAQ, and overall, pretty much everywhere that you would put your money, you would have lost money. So, apart from, bond markets and things like that, especially when you're accounting for the fluctuation in rates as well. So although you could have put your money into the FTSE 100, the difference in currency may well have actually ended up losing you a lot more money anyway. So just something to bear in mind. And I should point out that all of these numbers are based in US dollars as well. The NASDAQ, the reason that got punished the hardest, obviously, is because really at the start of the year when we saw that kind of pivot from the Fed and the kind of raising of those rates and how aggressive that became after a while. So at the start, it was kind of slow, but markets really weren't expecting it as much, I don't think. It was a bit inflated in terms of valuations. But through the year, we kind of saw that kind of ramp up quite rapidly in the US especially. Europe a little bit further behind. In fact, Europe really didn't do anything until kind of Q3, Q4. So, you could argue that Europe is, kind of in a position where they can wait and see how things go in the US to better know how to kind of smooth out the kind of curbing of inflation. So the highlights for Q4, it seems like a really long time ago now, but believe it or not, the FTX fraud situation was actually in Q4. Yeah, right at the very start of the quarter, everything came out about Sam Bankman-Fried and what was going on at FTX. Obviously, a lot of kind of ramifications from that all the way throughout crypto, which really made a bad year worse for crypto. It wasn't having the best of times anyway because of the kind of the movement of money that we saw as people were trying to get away from risk assets and move towards safer havens. But the FTX situation really caused a lot of damage in crypto. A lot of other companies that had deposits with them and money with them that ended up losing money, some funds that were invested, obviously large investment names and VCs were involved. I don't think I really need to go into all the detail of it simply because you've probably heard so much about it everywhere else. The good news for us was that we pretty much had no exposure to cryptocurrency at all at the time. So really we were unaffected and we could just kind of watch the price come down and think, where are we going to start buying? Which eventually I did start doing, but not with vast quantities yet. The European equities rally, I think, is another thing that's worth highlighting. So I kind of mentioned that a bit in the section just now as well. We could see the difference. And as I said, I think really that comes down to the ECB rates being risen at last, which kind of, I think, provided a bit of relief to the markets of like, okay, finally it started. We kind of know where we stand, especially since, the Bank of England, even the Bank of Japan was moving at a similar pace to the ECB. So that should tell you everything you need to know really about how long Europe was really waiting before they started lifting rates. The Fed as well. So the Fed was a little bit different because they started to kind of signal that maybe we were near the top. Again, you have to kind of cast your mind all the way back to, to Q4 in like November kind of time when all of this was happening. But at the time, there was still a lot of fear around about inflation. We hadn't really got through winter yet, so nobody knew how bad Europe would be affected by the energy situation. There was quite a lot up in the air, but the US were kind of signaling that, hey, maybe 2 or 3 more rate hikes and it'll be over. And sure enough, as we moved into Q1, that does seem to be the trajectory that we're on at the moment. And in fact, people are even talking about potentially the soft landing not even being a landing at all in terms of the impact on the economy and the chance of recession in the US. Auto sales took a real beating this quarter, especially, I think, is really when it kind of hit the fan. We knew that there had been a lot of quite poor kind of periods throughout the year. even for companies like Tesla, who really have much kind of broader appeal, because obviously a lot of the market is looking for EVs. The same was also true for the used car market. That slowed down dramatically as well. And I think if you kind of look at the outlook that a lot of these companies have provided in their most recent earnings, it doesn't really look like it's going to get too much better this year either. There are still some supply chain kind of issues that are hampering the industry a bit. And obviously, inflation and the market becoming more competitive as well has really kind of made things difficult for a lot of these companies that are going through various forms of restructuring and deploying a lot of capital to try and pivot towards electric vehicles more and figure out their strategy. So that actually hit us quite hard because of our forward position as well in the quarter. And the last big news was the change in policy around COVID by China. So this really stemmed from the kind of protests and things that were happening out in China at the time. And I think also perhaps a realization from China that the rest of the world has already given up on trying to contain this thing. And it's probably not going to work if they just keep trying to contain it on their own, because, viruses don't really care where borders are. So yeah, that's, I think, broadly speaking, really, really good news. We did see quite a big bump actually in the Chinese markets not long after this was all announced in December. So we finally saw some of those names that have been falling for well over a year now get a little bit of relief, although perhaps not as much as a lot of people were really hoping that they would. Again, this has quite big ramifications for all of the different kind of areas of the market that we're investing in, especially things like semiconductors and solar panels. A lot of technology products have part of their supply chain over in China. So this should help kind of ease some of those problems for a lot of different companies. In terms of some of the highlights that impacted our portfolio, so the first one you can see there is actually a picture of a solar farm that's owned by, well, it's not owned by, but uses Jinko panels, Jinko Solar, which is a position that I added about halfway through the year, and one of the few positions that did pretty okay in the last quarter for us in terms of solar. So despite having really, really blockbuster earnings again, and still producing good guidance looking ahead, the solar industry stocks really took quite a big hit during the quarter. To be honest, I can't really find a good reason for it, apart from that valuations on some of them were a bit extended, certainly, but the fact that they beat their earnings so convincingly again, and then if you actually look at the most recent earnings, they've done that again as well. It's quite confusing to see these stocks pull back as much as they have. Some of them, like I think Enphase, if you look at the price now, is down by like 40% or something from its highs already, which is really, really substantial for a company that's been consistently beating and raising guidance up until this past quarter, where they didn't really raise guidance as such because of the slightly softer market in the US. But I'm rambling. That's besides the point. So I'll stop rambling. But yeah, so the solar sector really didn't have a great quarter, held our portfolio back, which actually makes me quite happy that we managed to outperform the NASDAQ in the quarter, considering that. And again, I think even in the current quarter, talking about where we are now, I'm underperforming the market, but when I look at the amount of exposure I have to solar, I don't feel too bad about it, because I'm very confident that the market will bounce back, because to be honest, the valuations are much more appealing now. So there was also a similar kind of crunch taking place in EVs. So Q4 was a relatively bad quarter for tech generally, as I mentioned. And for EVs, that I think this was the quarter that it really kind of came home to roost. And one of the positions for me that was most affected by that actually was Arrival. I had already removed almost all of my exposure to the company, even though I was really, really bullish on them only a year ago. And actually it made them one of my bigger bets, especially considering they're quite a small cap company. But yeah, they are essentially on the verge of bankruptcy, unfortunately. So maybe I'll never see that cool looking bus in the picture. But it wasn't just them. Pretty much everyone was being hit, as I mentioned before. Tesla had a bad quarter. Ford had a bad quarter. VW didn't have a good quarter. Pretty much nobody had a good quarter, really, in the auto industry. And also the EV sector especially saw valuations really fall down quite hard. Electrification is really the thing that saved the portfolio, I would say, during the quarter, or certainly one of. So companies like Siemens did extremely well. New positions that I opened were Prysmian Group, which are based in Italy, actually. So they build a lot of different types of cables and things. They do quite a lot of stuff, actually. But part of the reason that I got them is that they're one of the biggest names in terms of building interconnectors that connect different countries' grids together. So yeah, they've done quite well since I opened them. But really the star, I think, is ABB, which have been one of the biggest positions in the portfolio for a long time now. But they've really kind of just flown. I think they're actually up over 40% in the quarter. Something around that. Okay, it wasn't 40%. That was someone else. That was Rockwell that was over 40%, which is actually the next one that I'm going to talk about. So two other kind of big investments with a slightly different theme, more around kind of modern building methods, were in Rockwell and in Boise Cascade that I mentioned earlier. And yeah, both of those companies had fantastic quarters. Rockwell especially was up by 42.9% in one quarter, which is crazy, to be honest. So yeah, really happy with the performance of those two. Obviously, we've seen them come down a little bit the following quarter, which isn't surprising when you go up by that much. But when I kind of zoom out and think long term, I think that both these companies are in really good positions for long term kind of trends that are behind my thesis for investing in them. Okay, so I've still got quite a lot of time for questions, by the way, because we're nearly at the end. So if you've got some questions you'd like to ask, then feel free to put them in the chat. I see a couple about crypto already. So for 2023, again, it's always a bit of a challenge deciding what to put in these little three boxes that I have each time on this presentation to decide where what parts of the market I'm most excited about and think are going to be interesting through the next kind of year or so, or the next quarter. And it's no surprise to see interest rates there again. We still don't really know for sure how things are going to unfold in the US. A lot of people are expecting 0%, no rise next time. If we do see one, it's only going to be small, probably. And actually, there are even some people that are now kind of talking about that maybe they might even start reversing already, which I think is a little bit far out. I would expect them to pretty much remain roughly flat through the year. So the US isn't quite as interesting, but in Europe, the UK, Japan, even countries like South Korea and things, it's obviously a very different picture. And they're all at kind of different stages, and their economies are in kind of varying different kind of degrees of stress. So it's going to be really interesting to see how all of these interest rate moves kind of pan out, and we see how quickly different countries recover and how that affects the economy of those countries. And of course, the spending of those countries and whether or not they do kind of big infrastructure plans like we've seen Biden do. Speaking of big infrastructure plans, that kind of leads me on to the next point reasonably well. So I think something that's quite interesting at the moment is looking at housing markets generally, globally, to some extent. I think that there's a lot of pressure on a lot of them because of the increased mortgage rates. So people can't, afford their repayments as easily. which has caused a slowdown in home building, but there's already quite low inventory. So that's, really kind of adding to potentially making prices go up more because there's less for people to buy. So, there's a lot going on in terms of what kind of moves this market around. But I think the industry is actually looking kind of cautiously optimistic. We've seen, for example, a lot of the steep costs that there were in a lot of the supplies, like especially timber was the one that hit headlines through 2021 and 22. We've seen those costs come back down again, but there's still a lot of kind of labor shortages that are affecting the industry. There's also a lot of new regulation coming in. So, for example, in the EU, there's new regulation coming in around the level of insulation that properties need. Over in the US, Biden has made some pretty sweeping changes around what he plans, including trying to get rid of gas stoves in people's houses, which is causing some people to, I don't know, be upset about not cooking with fire. But all of these things have a big impact in terms of what buildings are made out of, what the demand is for those things. And it's not just buildings as well, but there's motorways and everything else, or the other infrastructure that supports those houses that are all impacted by that. So I think infrastructure spending is going to be pretty big, not just in the US, but probably in several countries across Europe as well. And that provides a lot of opportunities for some of the areas that we're investing in. So obviously in the building materials companies that I just mentioned, BCC and Rockwool, but also in a lot of the electrical kind of goods that we also have a lot of exposure to. So yeah, there's a lot going on, and I think of course the other thing is that it may actually kind of drive some interesting developments in terms of where people are shifting their money as well. If people don't see property as so much of an investment potentially, it's there's too much to talk about in the 5 minutes or so that I'm meant to be on this slide for. So I'm just going to take a sip of water because my mouth is very dry from all the rambling I'm doing. But the next thing, of course, as you probably would expect, based on how I've been talking about it, is electrification of everything. And again, you can see what I've written here about Biden's spending plans, which impact not just the kind of housing market and construction industry, but also electricity and energy. So, and even the kind of products that people have in their homes and things. So heat pumps, for example, will see a good boost from it. And in Europe, they're already seeing that. So you can see, as I've written here, it affects the gas stoves, it affects EV charging, it's affecting the kind of lights that people are buying for their homes to light things up. And a lot of these were already kind of trends generally from consumers as inflation ramped up, especially for energy. People were looking for more and more kind of efficiency savings. And that's really where a lot of the companies that I talked about through this, and if you kind of browse through my portfolio, you'll see that's where a lot of the companies that I'm investing in are really kind of innovating and providing good value. So I'm very confident in the growth of the portfolio in those sectors. And I guess the good thing about investing in those kind of areas is that it actually reduces volatility a small amount. So we're slightly more kind of correlated with the S&P 500 because of the fact that we've got what are quite often seen as kind of, boring legacy kind of companies that just, make big industrial goods and things like that, rather than the kind of consumer stuff or something really disruptive like a software as a service model or something like that, that's a bit more exciting. So it provides us with some protection, but it also actually provides us, I think, with some opportunity that perhaps a lot more of the market hasn't really recognized yet. But again, there's still a lot to see kind of develop in this space. At CES, we saw Matter announced, which is the kind of new standard for how smart devices talk to each other. So that's going to make a big impact. I think this will affect networking and semiconductor sales as all of these things kind of grow, and houses and homes and grids and cars and everything kind of become smarter and start talking to each other and become more and more energy efficient, and kind of we all trade energy between each other and all of our devices. So yeah, that's the last kind of big theme overall that I'm really looking forward to seeing how it kind of unfolds through 2023. So yeah, I've talked quite a lot. So hopefully I'll have a breather while I read some of your questions. Feel free to type them in if you haven't done so already, and I'll spend maybe 15 to 20 minutes or so trying to answer them for you. One final note before I do that is obviously, thanks to eToro, I am actually now verified on Twitter. So if you don't see the little eToro logo and the check mark next to my name, then it's not me. Be very wary, because there are a lot of scammers now, to the point where if you see one, you may as well not bother messaging me anymore, because it's like a game of whack-a-mole, especially on things like Instagram. But even on Twitter, it's bad. Yeah, please be aware of that, because you know, they'll try and tell you that I've got some cool new crypto investment or something like that, and I don't. And if I did, I would probably be talking about it on eToro, not to you individually. So yes, just be aware of that. All of my social media and my website is obviously shown on the screen at the moment. Okay. So I've got 3 questions that I can see at the moment. 4 questions. Okay, so the first question is it the right time to invest in crypto? So this is, thank you for the question, by the way. This is, I think, probably the thing that a lot of people are talking about now, especially with how some of the assets have performed over the past month or two in the start of this year. So yes, I think is the short answer. The slightly longer answer is yes, but carefully. I think we're still there's still a lot of kind of disruption behind the scenes, and a lot of devastation that has been caused by the collapse of FTX that we may not necessarily be able to really see. So I think that there's still a lot of potential for exchanges and some of the different tokens to go bust or to you know, devalue substantially because of the stresses that they're under and the state of their balance sheets, you know, who their debts are with and things like that. So I would definitely say that, you know, it's very worthwhile to be very cautious about what you invest in and where you keep it and everything like that. Obviously, we're on eToro, so, you know, that's mainly the problem that I guess the technical teams at eToro have to deal with. But it's still something that we should be very, very wary of, because even if it's an exchange completely unrelated to our holdings, the fact that that would go down would obviously make a big impact on the markets. So probably investing in the kind of higher liquidity stuff is going to be better, the higher market cap stuff. And generally, that's somewhat my view at the moment anyway. I don't think some of the more speculative things in NFTs and even DeFi, which, you know, a lot of people are kind of pushing at the moment and saying that it's much more justified now. I still don't think that those are necessarily the best places to be kind of spending your money in the crypto space. I much prefer the really big names like Polkadot, which someone I can see has asked a question about, like Matic, Polygon Network, Ethereum with ETH2 obviously is a very good option. So yeah, I think those are the sort of things I like. There are still a few other ones that are a bit lower down the list, like Loopring and things that are interesting. But really for me, I'm probably going to be sticking with those 3 that I mentioned for the most part. So Matic is the one that I'm probably the most bullish on and have been for quite a while now, and Polkadot as well. Well, actually, I guess now that I think about it, I'm probably about as bullish on all three of them. So yeah, I think all three, Ethereum, Matic, and Polkadot are all the projects that I'm most interested in. For me personally, in terms of plans with the portfolio, I don't think I'm going to be adding too much exposure yet. I would prefer to wait and see, where things kind of level out after the hype has kind of died down a little bit from this little rally that we've had. But I would expect probably to increase exposure over time through this year to 2 to 5% somewhere. At the moment, we're sitting at, I think, around 1% off the top of my head. So yeah, don't hold me to it, but I think it's around 1%. Yeah, I would look to grow it a bit, but I think that investing too much when we're still not really too sure how things are going to unfold in a lot of different economies around the world. And obviously the retail investor has kind of been pushed out a bit because of, inflation. That's going to have an impact. Okay. The next question is from Jus. Do you think we might see a new all-time high for DOT this year? So Polkadot, probably not, to be honest. I don't think. I think it's too soon. I think you've got to look at the correlation with traditional markets. Even though obviously there's a lot of innovation, a lot of changes in crypto, regardless of the project, there's always a lot that's going on. And there's always the potential that we could see something like that. Really, you need to look at what the overall market's doing. And I'm expecting the NASDAQ to remain, in the low kind of growth area for the full year. So where I think a lot of people were getting a bit carried away in the first quarter and saying, we're going to see a 30% year or something for the NASDAQ and we're going to recover it all and be back where we were a year ago. I'm not convinced that that's the case in any of those markets. And if the NASDAQ and the S&P 500 aren't going to be moving in that kind of direction that aggressively, then I don't really think that crypto will either, because of the amount of correlation there is between those markets. So personally, I think it's probably one that you need to be a bit more cautious with in terms of talking about all-time highs. I think we could be waiting at least another year for that. Maybe in 2024 we'll see it, but again, it's hard to predict accurately that far out with, the amount of kind of different variables there are that are affecting economies at the moment. Hi Jay, sorry I joined the call a bit late. Have you said anything about plug power? Got a lot of expectations. I should probably press the answer live button. Got a lot of expectations. If yes, no worries. I will listen to the recording from the beginning. I haven't said anything about them really. I mean, I don't think there's that much to say really. They're just one of those companies that it kind of has to wait for the infrastructure to catch up a bit. There are kind of core markets for plug that are really what's actually generating a lot of the revenue for them at the moment. And, it's kind of like the more stable side of the business. And that's things like, the mining industry that uses a lot of hydrogen equipment and warehouse forklifts and things like that, that use hydrogen. In terms of like hydrogen trucking, I still think that that's a little bit unlikely to really develop in most regions of the world. And probably we will end up with electric trucks of some sort, or simply moving more towards just using rail for long distance, which is the only area really that hydrogen makes the most sense. Again, when you look at like kind of the other kind of big markets for it, so people talk about using hydrogen in heating systems. I don't think that's very viable. I think we're going to be moving towards heat pumps. So I don't really count that market as a potential growth avenue for them. For me, the big win would be if they get into shipping in a big way. And that is what we're starting to see a lot of infrastructure kind of being built around for using ammonia as fuel. And, ammonia is, a combination of hydrogen and other things. So yeah, I think green hydrogen for shipping is going to be the big win and the big area to kind of look out for developments in. But at the moment, it's one of those positions that you just kind of got to sit on for a bit, and it's a little bit of a hit and hope. It's definitely one of the more speculative positions in my portfolio. Not one that I would recommend everyone kind of dive into head first. But I think, it is coming. And I think if you look at things like Nell, for example, in my portfolio, and the electrolyzer kind of business for producing green hydrogen, those areas are really growing at a very good rate. And we're starting to see hydrogen being used in things like steel. There's talk of it being used in concrete as well now. So, if that happens, those will be really, really big markets for them. But we just kind of need more time, I think. I've got two more questions, which should line up actually pretty well for timing. Okay. How are you going to capitalize on AI? Okay, so the next question is related on this as well. So maybe I don't know if I can answer two live at the same time, but let's try it and see what happens. Oh, I guess I can. I don't know. I've never really had to use this Q&A thing before, so I don't really actually even know what it's kind of signifying to you guys, but we'll see how it unfolds anyway. So yeah, the question is, how are you going to capitalize on AI? I'm especially interested in consumer AI interfaces such as ChatGPT. And then the second question that came in from Anonymous says, hi Jay, what is your position on investing in AI? Okay, I was expecting this question to come up because it's quite a hot topic now, and I did consider writing a good long post, one of my typical kind of essays of a post about what's going on in the AI space earlier this year, but so many other people were talking about it that I didn't think it would necessarily actually add that much value compared to talking about something else. So obviously ChatGPT has been incredibly disruptive. I think I saw a report the other day that said that it's one of the kind of tests they do to try and determine in the kind of like intelligence level essentially of an AI, marked it as being equivalent of that of around a 9-year-old. So it's not at the point where it's going to replace everyone's jobs. And I don't think we need to worry about that in the immediate future. But I do think that when you actually use it, and if any of you haven't, I would recommend trying it because it is interesting to say the least. I do think that it's a very, very definite step up from where we are. I think the thing that's most interesting about this is probably the thing that you already know, really, because I think it's the thing that everyone's really talking about, which is the disruption that it's going to cause to search engines, especially Google. Because they're the dominant player in the search world. When you actually use ChatGPT, you can ask questions in a very, very different way. And it may take actually a bit of unlearning even from consumers to learn how not to type for Google. I think we've all kind of got used to, how you sort of Google things and how you search things. But that does change with this. You can ask questions that are much more kind of open-ended. And it will kind of go out and collate information for you and then kind of form a response, as opposed to what search engines traditionally do, which is kind of, scrape around, find the thing that's most popular and has the most keywords in it, and then, throw that in your direction instead, which is often not the thing you actually want. If you're trying to troubleshoot a problem, often you end up with just lots of information about the thing that you're trying to fix the problem for, rather than how to fix the problem. So yeah, it's going to make an impact in a lot of different markets, but search is going to be the main one for sure. And I think you can see that in the valuation of Google and how Google's management responded as well. Microsoft are in a very good position because of the fact that they obviously invested in it quite heavily early on, and have, of course, agreed to spend 10 billion on it as well since then. And are integrating it with Microsoft Bing as we speak. So who knows, maybe in 2 years' time, we'll all say that we're binging things instead of Googling them. But I maybe won't hold my breath too much just yet. In terms of my thoughts on it like from an investment perspective, I don't think there are that many good opportunities yet in AI itself, in the software. I think probably the best bet really, and perhaps I haven't listened to their call yet because I don't have exposure to them currently, but NVIDIA's earnings were today, I think they were today, or were they last night? Either way, NVIDIA has moved up dramatically in markets this morning, and I'm going to go ahead and guess without looking at it that is driven primarily from demand from the server kind of infrastructure market and the AI cards that they produce. They pretty much have a monopoly-ish on there. Obviously, AMD produce things like that as well, and there's different types of semiconductors that are much more specialized to that sort of thing as well. But I would say that it's looking increasingly likely that companies that produce hardware that's really necessary to power these things are going to be the big beneficiaries. So a lot of the networking names like Cisco have had a pretty rocky year. They've been okay, but they're not seeing the kind of growth that you would expect as businesses kind of cut back on their spending. I would expect to see that start ramping up again, because if we're going to be using AI, we're going to need a lot more networking. And then the same with semiconductors generally, but especially companies like NVIDIA that I think have probably got the best kind of advantage in that market. And those are the areas that I'll be looking at most in terms of getting exposure to it. Obviously, I hold AMD already though, so we have some exposure through that. I think just because we've got a little bit of time left before we have to end it, I'll spend a bit more time talking about some of the areas that I think it's going to impact, even though nobody really asked. So I actually think that, dare I say it, even in the investing world, we could see AI start playing a much bigger role. We've already kind of seen, robo advisors and things like that in fintech for some time now. But I think that as an individual investor, this is actually a really empowering tool, where previously you would have to spend thousands and thousands on reports on different industries to try and get an idea of the lay of the land and who the big players are and what the big innovations are and expectations from different companies and how things are going to evolve. You can instead just ask that to ChatGPT, and because it's collating, I think this is the most important part of it, because it's collating all of that information that it's going back and searching through, even though a lot of it is historic. So it's not going to be quite as good for, real market events, but the information that it can do there will help the research process dramatically. So it's actually something that I'm even looking at using a bit more as part of my kind of workflow for researching new markets. So yeah, I think that's one area that we're going to see make a difference. I think actually everyone's talking about ChatGPT, but if you look at what companies like NVIDIA have been doing on the image side of things and image recognition, and Tesla even as well, there's a lot going on there that's really interesting as well, and I think that's going to become increasingly important. Sort of, not so much on the machine. Well, I guess it's more machine learning side of things, but also on the kind of interpreting that information and producing something useful. Even if you look at some of the features that have been put out by Adobe in terms of how to kind of merge images and mask over things. Yeah, we're going to see a lot of applications in those sorts of cases as well that come to the forefront in the coming years. So yeah, that was a really long answer. I hope it was useful and gave you a bit of kind of insight. But yeah, I think it's certainly going to be really exciting to see how AI kind of evolves. Okay, if there aren't any more questions, I think we can call it a day. If you missed anything, if you arrived late and you want to watch the recording, I will be uploading it to YouTube. I'll also be doing a dedicated Q&A live stream. It's a little bit more informal, a little bit more casual, can spend more time talking about things. So that's next week. I'll be posting about that on my eToro feed as well. So if you want to find out more, then obviously head over to the feed, and I'll be posting things there. And of course, you can follow me on all the social media stuff that you see on the screen currently. So yeah, that's it for me. Thank you very much, everyone, for coming to attend. Hopefully, we'll have a good year for 2023. And I will see you guys in the next one. Thank you.